Welcome to my weekly review. Thank you for tuning in and watching here. We have a perspective on the market. Everybody has a perspective on the market. I'm going to give you mine. You're looking at a monthly chart of the Nasdaq, and I wanted to just pull back a little bit, look at the monthly here, and just go through this, cup with handle pattern here. We had the bottom from 2022. Then we had the nice run up in 2023. Then the three waves down last fall, July, August, September. Then in October, we reversed higher for the 5 months. And now this month, we're down 6.7% over, nearly 1,100 points. And a nice correction here in April. And people get a little crazy with their predictions, and you just want to take it, one day at a time. You want to take a step back and look at what the market is actually doing here. This is a weekly chart. It shows you the, the cup with handle pattern there, the lows from the October 2022, and then the run up, then the pullback to October of 2023, and then we had this nice run up. And now last week there was some. I'm going to get to the daily chart and show some of the action, but we've been down 6 out of the last 7 weeks now. We've corrected 9% nearly on the Nasdaq. And you could see this inverted hammer candle, and people will say, "Oh, it's ugly." It's just a real dramatic break from what it had been doing. So investors, this is pretty much tech related. I'm going to get to that in a minute, but yeah, pretty much, Nasdaq and S&P related because of these large cap technology stocks have so much weighting. But if we take a look at the index here, this date here, I got to get the date. It was March. Let's go back to March 8th here, where it reversed higher. That was the day that the NVIDIA was up to 974 and it reversed lower on that session, and it pulled back to its 10 EMA. You can see the whole time from that breakout from October, it'd been riding its moving averages, undercut the 21, but found support, pulled back to the 21 a couple times. But now we were consistently seeing, since this day here, March 8th, okay, we see it pull back to the 21, find support, runs up again to a new high of 16,538. What a random number in an election year, 538, 16,449, and then pull back to the 21. And so it's regaining, new highs. And so you think everything's fine, right? Even though this is definitely a caution sign. And then we get this day here on April 4th, where it undercut the 21. That was a Thursday, I believe. Yeah, Thursday. And then on the Friday, it kind of recovered, had an inside day. But it's still, you can see it's trading below the 21 every day. The low is, below the 21. And then we had another day, I think this is a Thursday as well. It breaks above, the moving averages, closes near the high. So you think, okay, we're off to the races again, right? We're going to take out the old 538. But no, the Friday, it was down. And then we come in Monday and it sliced to 50. And that's when I went dead red. And then people were saying, like, does that mean to sell everything? No, that doesn't mean to sell everything. I mean, it just depends on your time frame, where you bought a stock. If you bought like NVIDIA at 300, you might want to trim some, but I wouldn't say sell everything. I mean, it just depends on, your time frame and your entry price. And definitely though, this cascading lower here, you think, at some point shorts are going to cover and we're going to get a bounce, but it just didn't happen. It was just relentless selling. And these institutions put a lot of money and they bought into this AI theme for the new bull market, and now they're just taking profits in these tech stocks. Well, before I get to the tech stocks, I have to show the Dow Jones, because Dow Jones, it cascaded down a little bit too, but it stopped going lower and actually had, an attempted rally on this day, but undercut the lows. So on Thursday, it had a day one of attempted rally, and yesterday was day two. So the Dow Jones is looking, like on Tuesday could start, a new rally. So I'm watching that for sure. Somebody was mentioning the IWM. It was actually up yesterday, so maybe it's through going down, in the RSP. Yeah, it was up yesterday. Maybe that's through going down. But the Nasdaq, Due to, I'm going to blame Apple on this one because I trade stocks, not indexes, but I do, like to know what the indexes are doing because they provide, the tailwinds for our gains. Anyway, Apple, I'm going to blame Apple because this definitely was selling off way before the indexes. It's the big kahuna, the big market cap it was, and now it's down to what, 2.5 trillion and just in a downtrend, clear downtrend. Tesla, the same thing. I'm going to blame Tesla too. They're going to report earnings on Tuesday, I believe. But yeah, it's a clear downtrend. So we're going to blame those two. And I did mention Meta. So like if you own Meta and you bought it here in a base, and this is why I'm a stickler for buying in bases, buy near a base. I don't care if it's an oil and gas stock or a miner or crypto, whatever, buy near a base. Because if you bought here at the 330 or the 313, it's at 521 or 481, you don't really care. I mean, yeah, it's sliced, it's 50, and you don't want to lose profits, and you might want to trim some, but you have a good entry price. You can withstand a little bit of a correction here. So they're going to report earnings this week as well. So that's what I'm talking about, time frames and entry points and buying near a base, buying near a constructive base here, a solid base for Meta, you're in good shape. The other one I wanted to show was Microsoft, same thing. It made this base here recently, that 366 area, and then it broke out of it and formed a little flat base. So if you got it at 360 or 365 or even 380, you still have profits. I would be trimming, a slice to 50. You don't know how low it's going to go or how long it's going to last. And they have earnings April 25th, which is, I don't know, Wednesday, Thursday, something like that. Anyway, I think it's Thursday. Let me see. The next one was Apple. Blah, blah, blah. Okay, Amazon sliced to 50 as well. Not too bad. But once again, it had this base here at 145. So if you bought it there, you could take profits along the way. Certainly with slices to 50, you could trim some, but if you still wanted to have a position, say if you bought a 10% position and you trim, half along the way or, a third, you would certainly have to trim. I would have to trim some here as it sliced to 50, but like I said, not everything. If you have a good entry point, and if you got it, when the uptrend started, way back here, below $100, it's a little easier to hold. That's why I say time frames and entry points are just critical when you're discussing stocks, and a lot of people argue over stocks, and it's all about time frames really. Google is holding up better than most. It has this buy point here at 153.78. I don't know why, this thing's still above its 21 here, so I don't know why Google's holding up and the rest of them aren't. We can look at this on the weekly chart. This is a weekly review. And you can see the earnings are heading due north. Nice constructive base here. It's got the 3 weeks tight. Yeah, it had a pullback last week. Everything pulled back last week in technology, but still looks good to me. And they're reporting on the 25th as well. So the 25th and 24th are going to be big days this week. And then the last one I have to cover is NVIDIA. A lot of talk about NVIDIA. If you're a believer in the AI, the new bull market is being fueled by AI, then, NVIDIA is the king. And yeah, it's not going to go, up every day or every week or every month, but you can see this earnings line heading, straight up. And yeah, it corrected a little bit. But if you bought near this base here at 500, and you ran up to 974, 900, it was having trouble at 900 and you took some profits, and certainly it was a slices to 50 here, you take some profits, but it's getting near a 50% retracement of this move from 500 to 974. I'm looking for maybe about 730 area would be a full retracement. And maybe, it does something like, forms a little base here. That's what I'm looking for NVIDIA. I don't think this thing's just going to crash and burn. You do see the relative strength line crossing below the moving averages, which is a sell sign, but it just depends, like I said, on your time frame. And if you got it, if you've been holding, I know people who bought this thing, less than $200. So, for them, yeah, they're taking some profits, but they've had a nice run, made a ton of money. And like I said, you could see these big institutions, right? They were buying this stock, based on the AI theme new bull market. Now they're just taking money out and redistributing it into other areas. And I'm going to get to that in a minute. Um, I always tell people that when you see these commodity stocks running up, it's usually bad for growth and technology. And this time it's true once again, because we've seen a lot of commodities running higher. This is SMCI, one that I had like at $50, $90, bought it again at $300. I've traded this thing many, many times, but for me, this clean break is, definitely a sell sign. I don't know, it's got a 41 billion market cap with about 15 billion in sales, so it's not really an expensive stock, but technically, when they break like that, that's usually a bad sign. Maybe the earnings aren't going to be what we thought they were. Their margins are being compressed. Somebody knows something here, and you can see, like I say, the big bets, the big blue bars, and now they're just taking profits and just redistributing them elsewhere. So that's this thing looks to me like, it had the stage one base, the stage two ascent, the stage three, sideways, and now stage four, it's in decline. So we're going to move on to AMD once again. They put institutions spent a lot of money in supporting this stock and buying it up. It was more than a double here from this cup with handle breakout. And now you could see, you could see the big blue volume bars, institutions were buying it now. Now they're just taking some profits out of this thing. It doesn't mean that the AI revolution is over, not at all. It's just they're just taking money out and redistributing it. Of all these stocks, they all look the same. Some are worse than others. ARM had a bad break. That's a broken arm for sure. Broadcom, which is a pretty stellar company, broke the 50. And like I say, it just depends on where you bought this thing. How much pain can you tolerate? I don't like drawdowns. I don't like taking pain. But it just all depends on your time frame, your goals, objectives, and Broadcom's going to be fine. But we don't know how low it's going to go or how long it's going to last. But once again, you see that relative strength line trading through the moving averages. It's party's over for now, but they can set up in bases and recover and then be buys opportunities later on. Okay, I'm going to look. I mentioned the miners, the copper plays. When you see copper and gold and silver and coal and oil and gas stocks ripping, that's going to be a bad sign for your high valuation growth stocks and your technology stocks. We got Southern Copper here. This thing broke out of a base and is, this is what I would call a stage one base. Now it's in stage two, the ascending stage. Okay. And it's getting supported by its moving averages, forming a little bit of a, shelf here pattern, just holding its gains. That looks fine to me. Let's take a look at the weekly. Yeah, I'm not interested in buying copper, especially when with the downtrending earnings line, and it's just not my thing. But I just acknowledging strength here and what's being bought. Freeport McMoran is another one. It's a weekly review, so I'll look at the weekly. Yeah, and it gives you this, this is great about market surge. It gives you this earnings line, and you can see the earnings are going down. Yeah, the relative strength line is going up, but the earnings are going down. And it had a 3 weeks tight pattern here and just closing. It doesn't look that tight on the daily, but it's the closing price on the weekly. And Freeport looks good. The moving averages are trending higher, and that's what you want. And an ascending stock. CCJ is another one that's a little closer to a base here. Yeah, I kind of like this one actually. This is a uranium play. And I don't want to get too deep in the weeds of like what these companies do. I'm just talking technically, it's set up in a pattern and pulled back to its moving average. 21 here found support, closed at the 10 on Friday. So CCJ looks pretty good to me. Yeah, closed right at the 10, and you look at the weekly, and it's just, nice little consolidation. And this one has the earnings line going due north, and that's why I'm a little if I'm going to buy one, CCJ, Kamiko would be one that I would be more interested in. TECK is one that I had on my ready list. It's got a big base, got to look at the weeklies. This was rumored to be bought out and got a little bit of a a boost from that, but you can see it's a long period of consolidation. The earnings is starting to tick up. We'll have to see when they report once again this week here, the 25th. So I'll be looking forward to that. A lot of companies are reporting this week. And then Ego, like I said, if your best idea is gold, that's probably pretty bad for your growth stocks. Anyway, it's been moving up for a while here. You can see the consolidation pattern, another consolidation, and then just trading higher. You can see the relative strength lines moving due north, and that looks really good when you want to, you're a swing trader like I am. You want those stocks minding their moving averages, and Ego certainly is, but I am not going to be entertaining that. I think I mentioned, maybe I didn't, the coal stocks. Coal stocks are looking good. Once again, I'm not really interested in these, but I just acknowledging strength, acknowledging, areas that are setting up. And this one certainly is. You can see the pronounced cup shape pattern, probably needs to, a couple of shakeouts here. There you can see it right there on the weekly. Earnings are, so the earnings line going flat, but just acknowledging that, they're doing okay, holding up. This is AMR, another coal play, got rejected at the 50 there. So anyway, that's enough for the coal. I got to go to the oil and gas. My favorites. Yeah, if I'm talking gold, silver, coal, miners, oil and gas, you know what kind of market it is. ExxonMobil actually looks good. This chart looks good to me. You can see the base on base on base patterns, and eventually it's going to stop basing and go higher above that 120 level, I would think, at some point. So ExxonMobil looks pretty good to me. They report this week as well on the 26th. So this is going to be a real busy week. Chevron, got to mention Chevron if you're mentioning Exxon. This is pretty much like 40% of the XLE right here, Chevron and Exxon. This one's got a cup shape pattern, probably needs, I guess you could say that's a little bit of a nice little shake out there. Moving averages are trending up, the short term moving averages. And if you take a look at the weekly, it's trending. This looks like a stage 1B. How about that? Just looks like a long period of consolidation and just having trouble breaking out. These guys, both these two stocks, they pay really good, dividend yield and more of a value play. That's why your Dow Jones, I don't know why the Dow Jones is doing so good. There's a lot of stocks in there that are not doing well, like Nike and Apple and Microsoft. But anyway, I digress. Another stock, Energy Transfer. It's a transport pipeline, like it says in the name, Energy Transfer. Broke out of a base and just is minding its moving average. This is a real slow mover, big dividend yield, but, just acknowledging strength and pulling back to the 50 and finding support. So that one looks good. ETRN, another one of these transportation pipeline oil and gas stocks, and consolidation, breakout, and moving higher. So that's what you want in your stocks. You want them to go higher, right? I mean, if you're long, if you're short, that's another story. Anyway, I'm going to get out of the oil and gas. I could do this, all day, but I'm not going to. I've got to acknowledge the strength in the banks. I mean, when you start seeing Wells Fargo acting like this, my goodness, it's okay for the banks to have, their time. I don't know, interest rates are higher, the dollar. I don't want to get into it. They're just technically, Wells Fargo looks good. Making new highs is always a good thing, right? Earnings are just kind of flat. Yeah, Wells Fargo looks fantastic. All of them are looking good. AXP, they reported. These ones, have all reported here, the bank, so that's behind them. And you can see the earnings line here trending due north. AXP had a exceptionally strong day on Friday. I think they just reported yesterday. And you can see that, they got the blue numbers down here. The earnings growth, 27%, 39%. That's fantastic. You can see the relative strength line, going due north and close near the high there, the 96 percentile. So that's a nice hammer candle on AXP. We'll see if that can follow through on Monday. Deutsche Bank, man, I'm doing oil and gas and Deutsche Bank. This is not my type of market, but I'm just acknowledging strength and just, kind of observing what's going on in the market here. And this is a nice long base and then a breakout and move higher. I mean, that's what we want in our stocks, right? Goldman slacks these, I better not say anything. This company, they reported earnings. You could see the earnings line, which I really like on Market Surge. And what can you say about Goldman Sachs? Had a long period of consolidation, broke out, pulled back to the 50, found support. Now it's trading above 400. So congrats to the Goldman Sachs longs. And then Schwab, they reported last week as well. And this, I've got to go to the weekly for this. Nice, base on base pattern. Earnings line is trending south, which I don't like, but the relative strength line is heading north and, traded through its moving averages. So Schwab technically looks pretty darn good to these old eyes. All right, I'm going to get off this. I did the tech, miners, coal, oil, banks. I got to go to some retail. I'm just looking around here, folks. Lululemon looks to me like may have bottomed. This is a daily chart, so it needs more time. But this day to me, it hit a low and then reversed higher, closed 80% of its daily range, and now it was up 4 days in a row while the Nasdaq was floundering. Yeah, and so I don't know. I'm just observing here. Lululemon, not making any predictions or anything, but this could have been the bottom there at $330. So Lululemon looks let's take a look at the weekly chart. It's a weekly review. Yeah, there you go. Nice cascade waterfall. Hit the bottom, just stopped going lower, right? The sellers just got exhausted. And then the weekly hammer candle, 97% of the daily range. So weekly range, I should say, 97% of the weekly range on Lululemon. So that one looks good in retail where, a lot of retail is getting beat up. Levi reported recently as well. It's got decelerating sales growth, but we look at the chart and it's trading higher, right? Relative strength line heading north and apparel, clothing, you can see the earnings line going down and the RS line going up. So something's got to give here. Maybe the institutions know something. The worst is over, but you can see this cup with handle pattern broke out and now trading higher. I mean, that's what we like in our stocks, right? Trade higher. And we like that. ONON, this is a apparel shoe company, the running shoe, Roger Federer's firm. They report earnings on May 14th. And we'll just have to see. It did have a promising cup with handle, but last week, it pulled back to its 50 and started squatting there, like a lot of stocks were, and then finally broke on Friday, down 4% on Friday, 4.3%. But yeah, seeing that break here. That's looks like a technology stock. All right. Anyway, that's it for me this week. Pretty rough week for the longs in technology stocks. No doubt about it. We'll just have to see, how they perform during earnings. The institutions, like I said, made big bets on these, stocks, and now they're, not this one. How about go to Microsoft, make big bets on these AI, and now they're just taking profits ahead of earnings. We're just gonna have to see what they say at earnings time. This could be a massive blowout, and this thing could reverse higher. We're just gonna wait and see. It's normal to be cautious ahead of an earnings report. I certainly am. Anyway, like I said, that's it for me, except for I have one more thing. There's some IPO stocks that I'm monitoring. Just wanted to show a couple of Mobile Health Network Solutions, MNDR. It's a computer software medical. I don't pretend to know anything about it. It's just IPO'd and hasn't had a down day yet. So if you like your stocks going higher, this one's going higher. Up 33% on Friday, while the indexes were dying, and it was up 81% last week. So just acknowledging this stuff. But you don't want to be jumping in to IPOs because this kind of stuff happens where Reddit screamed higher, was up to what, $75 nearly, and now pulled back to $40. So like I said, fools rush into these things. Let them get a little trading history and don't be jumping in. ALAB is one that I have been watching, and this one crashed on Friday, but I will say we look at like the 30-minute chart, it gives you the entire history of this trading, and it's just kind of finding support at these, lows here. Undercut the low, which is, normal for an IPO. What was the low here on this day? Probably should go to a daily chart, but 65.21, and then on Friday 60.21. Okay, so it undercut the low, and just one that I'm watching. Like I say, you got to give these things some time, I think, to form an IPO base, and don't jump into them. Let them get a little trading history. And the other one is the GE energy stock. GE's been doing well, and the energy stock, holding its own. Just one that I'm watching, just observing. And anyway, that's it for me this week. Thank you for watching. Hopefully next week will be a better week. We have a ton of earnings to go through, so it's going to be a super busy week. And I think stocks are going to be trading on their new data points, their earnings, instead of Fed speak or any other, geopolitical news. I think the earnings in focus this week is going to be a positive for these stocks that have been, sold off recently. Meta, Google, and Microsoft this week for sure. Google looks pretty good. So anyway, that's it for me. I have a new ready list at mcstockcharts.com, and we never give up.